Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy charts. Not a lot of government data this week because the government is still closed and we won't get data from the government until the government reopens. So that's interesting. Lots of Fed speak, obviously, anyway. But on the crypto side, to me, the two biggest charts to pay attention to here are the gold chart and weekly Bollinger Bands. When weekly Bollinger Bands tighten and expand like this, as I wrote for Canary today, that this isn't usually a 1 week adventure. It is typically a 5 to 10 week adventure. Brings us into November, December, and then we'll see what we get after that, if anything at all. And gold, important to pay attention to because we've never seen gold take off like this deep into a 4-year cycle. In 2018 and 2022, gold was basically done and consolidating. So if there's anything, as people are looking for evidence of the cycle being status quo or extending, depending how high and how far and how long gold can just continue, that may inform us here on the cycle stuff. I still think we're going to probably see the end of the cycle by the end of the year. And then we're going to have a year of chop after that. But if we get gold still running, if stimmies are a thing, if rates go to 2%, right? We can paint a picture that would extend this cycle. It would make the blow off top higher and the pullback more violent, certainly. But that is a 2026 problem, right? So even though this might be the 8th inning, a high percentage of the returns typically are seen in the latter stages of a parabolic move. And we'll take a look at some stuff here on silver and IREN just as a proxy. But I wouldn't be scared when you're hearing people say, oh, this is the 8th inning and this is the end. I mean, we're seeing record flows into the ETFs globally for crypto ETPs. This is from CoinShares. Almost 6 billion in a week. I mean, that is massive. Something else you see usually late cycle is a lot of IPOs, a lot of new products, and we're certainly seeing all of that, right? It's not really a dispute that this is late cycle. We're seeing tons of ETFs, tons of IPOs, specifically on the crypto side in the US that have yet to be launched. And so we'll see what this looks like when we have 15 ETPs for each coin in, 5 issuers. You're just going to have so many products. We'll see who the winners and losers are, but people will definitely have access to more alts on the legacy side, that's for sure. On BTC, we're just chilling here at all-time highs. It wouldn't be out of the question to just pause for a little bit here, in my opinion. Not that we need to, but we've gone straight up since the 26th, pretty much. Would love to see us consolidate between 122 and all-time high. We don't need to just go straight up. We really don't need that. So don't be surprised if we do get some sort of mini pullback, but things look great. I still like 140, 160 as a target, and we'll see what we get. And as we'll talk about with gold, gold is just continuing a parabolic move. So it's hard to be bearish BTC when you see that. MSTR, however, is still not in a zone where I care. I'm bringing this up because people keep asking me. If you wanted to start opening a speculative position, I don't even think it's there yet for me. It's still in a multi-month range. It's not just MSTR. Anything that looks like this, to me, does not warrant a position unless you are highly, highly, highly convicted that MSTR will catch up. So I'm sure that's somebody out there buying calls and whatnot on MSTR. But the risk reward gets a lot more clear to me above 420. On the CME side for BTC, the basis trade, which is basically just the premium on the futures, is still quiet. We're not seeing crazy parabolic. If we zoom out a little bit, we're not seeing insane basis here. 15, 18%. You typically see that in the euphoric periods. Just a good little sentiment gauge. What does the futures basis look like? It's quiet. It's kind of like funding, same type of thing. Not really much going on there. For ETH, also slightly higher, but fairly flat. Nothing like November, December 2024. Basically double this. And let's take a look at Solana. Solana is higher. It's tough because some of the stuff is either liquid or just new and it's still settling in, but certainly higher. CME Solana futures open interest continues to go up. So any product that we're seeing that's coming to market, this is what you want to see. It doesn't really matter what the prices are, but if you're seeing interest, that is the most important thing. If you're seeing volume, super, super important. So on the schedule for this week, we have a bunch of Fed speakers, more speakers than data at this point. The Fed minutes, okay, whatever, but it's just Fed speak as far as the eye could see. A bunch of data that we're just not potentially going to see because the government's shut down, which is fine. Nothing super big. The big one was unemployment last week, and I think next week it would be CPI. If we're still shut down by the 15th, which as of today, it looks like we will be shut down for quite a little stretch here, it's possible that we just don't get the CPI data. Perfectly possible until the government reopens. On the FedWatch tool for meeting probabilities, meeting is less than a month, and we're pricing in a cut with near certainty. So this is unlikely to shift one way or the other within the next month. If anything, December onward is where you're going to see shifts in meeting probabilities here. But overall, I would expect us to get a cut next meeting, no matter what we see in the data. If we get data or not, if the government's open or not. GDP very strong here at 3.8, I think. Yeah, 3.8. Not a recessionary GDP. Looks great. We are cooking, folks. Truflation at 2.22. It's been super volatile. It's been all over the place. The mean here, the average, somewhere around 2%, maybe slightly higher than 2%, but you'd really have to pull a moving average on this. Could look worse. Certainly don't want it much north of 2%. The inputs that people have been really honing in on, food, electricity, insurance, those are the big ones that I've noticed, at least. Looking at the month-over-month data, we're only 6 days into October here. This looks to be coming down. It's super early to even say that, but at least it's not continuing to heat up. That's what we want to see. Some of this is tariffs. Some of this is AI, CapEx, right? It's all sorts of stuff in here that's pushing this data around. But no matter what, we do not want a 3 handle on CPI. We do not want a 3 handle on PCE. So it's good to see this stuff not quite to 2%, but not getting much, much worse. That's the important part. And this is the big one. I think a lot of people have seen this chart by now, but average electricity prices in the US just soaring here. And there's a lot of inputs here. This is super regional. Do you have data centers in your backyard? Do you have solar? Do you have nuclear? Do you have natural gas, etc.? So it's definitely not a one size fits all answer, but collectively what we're seeing is this, just runaway electricity prices, and AI will certainly be the first person or first industry to be targeted with regulations around this stuff. I mean, we saw it with the Bitcoin miners years ago in New York, in a few other states. They'll just charge you significantly more to use power. And at that point, the businesses will either collapse or leave. That is their choice, because they'd likely not super profitable getting taxed higher. So definitely a headline to watch here in the coming years for the AI story. Used car index flat. Might be silly to even look at this, but it's an inflation component in CPI. Housing prices are coming down, rents are coming down or flat. This is flat, but yeah, CPI is still rising, right? So something in the basket to whatever percentage component is bringing us up. It's not energy by the looks of it. It's not gas, at least. This has been essentially flat the entirety of the year. And now we're getting to a seasonal downdraft period. So this may go even lower from here towards the end of the year. And this is a chart that's really making the rounds today from Apollo, talking about percentage of the basket showing at least a 3% increase, annualized, monthly, blah, 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 right? So there's a lot of statistical massage here, but the data is the data, and it is concerning if this continues to creep up, because eventually that's going to work its way into the total basket, and it will push CPI higher. That's not what we want. That's not what anybody wants. On the liquidity front, if we look at reverse repo here, we're at 22 billion, basically just zeroed out here, not much left. The lower this goes, the longer it's at zero, the higher the likelihood for a liquidity event, potentially. But starting from 2 trillion plus to zero, that's a lot of money that's coming back into the ecosystem. Gold's been very happy with the liquidity story, very happy with the debasement narrative, very happy with the government shutdown. I mean, honestly, if there's anything that's going to help you sell the dollar and buy something else, it's dysfunction and malfunction of the government. So that has certainly helped, along with just, in my opinion, as a technical trader, just the breakout here on the chart. And it's something to consider for BTC, as I'm talking about, we might consolidate here, there, or whatever. This is gold. Gold just expanded for 10 days straight, consolidated for a day, and then just kept going, right? RSI, not super concerning yet. It is certainly in the overbought territory, but the reality is this is where you want things to live. You want things to live in overbought. What you don't want is what we'll see on TeraWolf, which is a bearish divergence, which looks pretty severe, where you're seeing higher highs on less momentum. You're not really seeing that yet on gold. So what I suspect is eventually we will get a move that pushes higher and you get a momentum divergence, probably somewhere near the yearly pivot, but we are not there yet. Now, there's plenty of consolidation periods, etc., that could happen in between now and then. And you can see the TK lines just getting pulled up along with the cloud. So very early on anything for gold, Liz Thomas from SoFi today talking about gold ETFs versus gold price. And globally, you just have a lot of non-ETF buyers. You know, you have Costco, obviously, is the big one people think about these days, but in every country, you have gold buyers for whatever reason, central banks. So you might not see gold ETFs explode in flows till the very, very end. So I wouldn't call this chasing. I would just say, look, I mean, people are trading it. They're buying it. Makes sense to me. And if anything, this tells me that there's plenty higher this could go based on flows. Silver's another one. Even if you're not trading this stuff, which I'm not trading silver, but it's important to look at this and say, okay, just paper trade it, right? Where would I get in? Where would I get out? What would my stop losses be? What do I want to look for? The day will come when you're trading anything else and you get this parabolic move, you're going to have to ask yourself the same exercise. Hopefully it's with BTC very soon. As we get higher and higher, people tend to close early and they tend to add late. So they tend to size up at the wrong place at the very top, or they just tend to think this can't keep going, right? Or they short it, right? Which is the worst thing to do. But I would look around at some of these charts and say, okay, you know, if Bitcoin looks like this, what do I want to be doing at various levels? Because it's not out of the question that we might see something like that. As far as metals that look ready to go today, palladium is up there. I saw someone posting aluminum. I mean, there's tons of metal charts. I didn't look at copper today, but individually, there's plenty of ETFs where you get this exposure, or futures. This is a textbook weekly breakout. Looked good last week and the week before. You've got you've got cup and handle, you've got inverted head and shoulders, all sorts of fun stuff down here. Certainly down the risk curve of gold and silver and gold miners and silver miners and junior silver miners or whatever, right? You know, we're going down the list, and this is alt season effectively for metals, where all this stuff is just getting repriced relative to liquidity and market sentiment. But from a trend perspective, looks great. On the weekly, REMX is another one. Speaking of parabolic moves, super volatile, up and down. Rare earth metals ETFs still looks great. Still looks like it wants to go higher, but it certainly has not been a straight line, right? But that's very much where the market is right now on the commodity side, on the metals front. For the bond complex, it's probably really good news that this stuff is all curled down a little bit. You know, if your risk off bucket looks bullish, that probably means your risk on bucket looks bearish. So to see this sort of flip-flop and kind of just stall out is probably what you want to be seeing right now if you're bullish risk, if you're bullish not bond stuff. So until this looks more encouraging price-wise, I don't think there's anything to worry about on the risk front. We've got the SPY just continuing. This is the 4-hour, great channel. Really no pressure at any point of rolling over. I saw UJ hit 150 again last night. You've got the Nikkei gapping up like 4% overnight. Again, we're in the 8th inning, but you get a lot of crazy stuff at the end of the run, right? Qs look great. Fought off the head and shoulders. Do I like fresh positions on any of this stuff? No, but that's why the individual names are doing really, really well. SMH looks a little tired up here. Certainly a little tired. I didn't have RSI on this, but probably a bit of a bear div. This could be, folks, the rare abandoned baby if we get a doji up here and a gap down tomorrow. At least I think that's what it's called. Putting myself out on the line there, but it's either that or just a vanilla shooting star with the AMD OpenAI news moving the ETF higher. Is it bearish? No. Fresh positions? I think you're a little crazy. To start taking fresh positions on that. Here's AMD. And believe it or not, this chart looks a lot like ETH. Now, I don't think ETH is going to magically teleport 40% in a day, but the point is this has reconsolidated AMD and was ready to go again. ETH very much in that same camp. Wrong cloud, but whatever. Consolidated, ready to go again. Bullish TK recross, price above cloud. This actually went before the TK recross, so whatever. But I like ETH at 4,800 or higher. Breakout trade. RSI looks fine there on ETH. RSI a little extended here on AMD, but you know it's going to settle in for probably a week or two. Definitely not a fresh trading idea. But you want to look for charts that look like this before the breakout, and that's certainly ETH here at the moment. And then you, of course, got the quantum stuff. I really don't have any comment on this. Definitely feels late for all of them. Another good sentiment gauge to just watch if the quantum stuff starts rolling over. I wouldn't expect alts to necessarily love that news, but the market's definitely throwing money hand over fist at quantum stuff right now. And XLF, the financial ETF, also quietly just consolidating here at all-time highs. We had news of a Comerica Fifth Third potential merger today. Rates coming down may help banks. I don't know. But from a TA perspective, just something else to watch. If you're looking for non-volatile places to take profit, XLF would be an answer. XLU, again, I wouldn't take fresh positions up here, but it looks great. Similar to that ETH chart, similar to AMD, you have the bullish TK recross, price above cloud, potential head and shoulders breakdown, consolidation, right? All this stuff is very, very good for bullish continuation. XLU being utilities, and that's taking off on the AI narrative. XLE energy, not really going anywhere, still does not look like a trade to me. And much like the bond complex, you probably don't want this taking off. You want energy to be just boring and flat, as oil tends to trade opposite of risk. And then on the healthcare side, XLV, you've had a decent breakout here, probably a little bit more risk off. But you're also seeing a big bounce on UNH in December into January. It had this head and shoulders inverted breakdown, breakup, kind of didn't really go anywhere. So I don't necessarily like fresh positions in this either, but if we're just doing a around the horn on what's moving, what's not, XLV certainly doing very well. Now for the miners segment here at the end, miners doing very, very well off of data center, HPC, AI, utility, power, right? It's all like this intersection of everything where they're just ready to go, ready to ramp up, have the contracts. And so they've enjoyed that narrative a lot. We're starting to get a potential div here. It's hard to be definitive about it until you get some closes on candles. In the next couple of days, we'll probably know. On the pitchfork, on the historic range channel that we've seen, it's definitely on the higher side. And look, if you think AI is going to keep going, if you think NVIDIA is going to keep going, maybe this just keeps going and doesn't care. But the technical viewpoint for me is like, okay, we've gone from 10 to 50 in a couple months. Maybe it would make some sense to slow down a little bit. So I don't love fresh positions on WGMI up here either. It's done very well. IREN, of course, has done extremely well from 5 to 50 plus at this point. It's had 3 decent entry points, nothing really recently. Not really bear div either. Again, this thing has lived in overbought territory. When people say the RSI is overbought, your response should always be good. That's what you want. People tend to shy away from this stuff when it gets into overbought territory, but this is a potential result, is you just trend in overbought. So this looks great. But again, fresh positions don't really make too much sense to me. Cypher, descending broadening wedge. Still has a decent move left potentially, but certainly later than I'd like for a fresh position. Bitfarms, a lot of us caught this one at $1.20 or something like that. I sold half on a double, still holding the rest. Really nothing else to do here. It looks fine, but where does this go? I don't really know. I think there's better entries elsewhere. Cores of all of the miners, from a technical perspective, probably the best looking for an entry, as this hasn't taken off yet. The pattern looks complete. This just needs a little bit of news to push it one way or the other. But any bit of good news, this should do very, very well because it's ready. It's consolidated above the cloud, just waiting. Wolf, on the other hand, this is what you don't want anything to look like after it's gone straight up. You have a multi-month bear div here. Price is continuing to go higher from 9 to 12 as momentum has slowed down a lot as measured by RSI. So this one I'd be very, very careful with. Certainly nothing I would take a fresh position on. And it's gone from 2 to 12, right? So take it and say thank you, but not something I like here. At the moment, CleanSpark is probably second to Cores on fresh position material. You're approaching a new multi-year high here. If we can get over 20, looks good on high time frames. Really has kind of gone nowhere for a couple of years and has a decent measured move left. I mean, this is, what else do you want in a chart, right? If they really are shifting to HPC data centers over mining, then there may be a decent laggard catch-up trade there. HUT kind of looks like Solana, right? It's just like crazy volatility up and down. I don't really know what you do with this here, but it's been tough if you've been holding this thing because it's just gone all over the place. Recently, it's gone from 10 to 40. So that's a great move. Hard to say here at the moment, though. Hive, probably third on my list. Course CleanSpark Hive, as far as tradable moves, I mean, this thing is up front. It's tough, right? It's up 1 to 5 since the low, but it's coming out of this multi-year range. I don't know anything about this business in particular, but I would imagine that there would be an attempt for most of this stuff to get back to their 2021 highs. Riot, another one, probably fourth on the list, has already taken off over multiple weeks here, broken out of this downtrend and above the cloud. So that's what you want to see. You don't want to see this. You don't want to see Mara, which is easily, by far, by a mile, the worst looking miner, unquestionably. Now, there may be a time when eventually this thing breaks out, when it moves up, maybe it has a headline or two, but whatever they're doing, the market says, based on the price action, we don't care, right? So unless they change what they're doing at a business level, I wouldn't expect this to randomly do better. A few others, Galaxy looks good. I don't have a chart for that. That still has room on it. Oklo pushing, right? You know, there's lots of stuff that's moving. So all the more reason not to be focused on stuff like this, which is just doing absolutely nothing. So there are plenty of options out there. I'd focus on breakouts, focus on opportunities, and just flat out ignore anything that looks dead. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.